Hello, trading has closed on May 25th, 2023. As always, we'll start with our disclaimer, go over our calls, make some predictions. It's my trading plan for tomorrow, which is Friday, May 26, 2023. Please trade at your own risk. My calls can be completely wrong. I also am busy most of this week. You'll have less time to analyze things. Look for the pattern with the early high, which is this. Tomorrow should also have the early high. We looked for a gap and a prompt move outside yesterday's range. That's what we said. We got that. We had lower targets. I thought they might not print. We now have a cluster of 3 days in a row where the targets have not printed within their preferred time frame. This happens about twice a year. Where you get a cluster where they don't print in the past, they've always printed at some time. So at some time we should trade higher and should trade lower, but nothing requires that time to be anytime soon. This is the FOMC announcement price. The break under it yesterday was negative because the price tends to separate markets going up from markets going down, but any signal needs confirmation the next day by trading past the close by 1 cent. That never happens, so there's no confirmation, and in fact when you gap over the entire range, I view it as the market's way of admitting yesterday was a mistake. This whole thing doesn't count if you reverse it immediately. So that one particular indicator is bullish, but of course the same thing happens for today. If we don't go past today's close by 1 cent, this gap up doesn't mean anything either, and that's not impossible. During the day, MEJT gave a signal to buy, but the minimum target was printed immediately. Nothing requires you to stop at the minimum, of course, and we didn't. I'm a little bit concerned about this 89-week moving average. Ideally, once you break past it, you'll stay over it. That's the yellow line. It's about 41.71. If we close the week over the line, over 41.71, I'm going to be forgiving of this, break back under it. But that isn't a lock. And if we don't stay over it, then this break might be false. You don't know at this time. At least I don't. Well, the idea is you've made wave 1, and somewhere you're making a wave 2, and then you'll start up in the wave 3. Wave 3 should be an impulse. That's no impulse by me. So I think we're still in wave 2. It's not clear we've even completed this wave Black Sea. We could still be in 4 and have one more drop. We gapped up, hit a higher high, closed under all the highs, and couldn't clear the high from 2 days ago. So after this impulse down, which was fast, and the long, steady recovery past this, we still haven't cleared these highs on the closing basis, and until we do, this is just backing and filling. It hasn't accomplished anything. Now, backing and filling after a gap down, that doesn't bother me as long as you keep going. And closing under all these highs isn't necessarily negative as long as you keep going. But you really have to keep going. If you're a bull and you want more out of this than we've seen, you really have to gap and promptly take out today's high. And if we don't do that, I think it's a negative pattern because so far this hasn't done what it had to do. Time doesn't run out though until early tomorrow, and we don't know how we'll open tomorrow. Well, tomorrow's pattern has a early high, but could still gap down. Typically it's a bearish day. with a low in the final hour. If it's bullish instead, we should see more strength. Now, my preferred wave count has us still in wave 2. It's not even clear we've completed wave A of wave 2. It is positive there's a VIX Bollinger Band reversal buy signal, but the rest of the stuff isn't positive at all. It's negative. The rally could not clear prior highs. It was accompanied by a drop in a number of secondary indicators. BPSPX is the number of stocks in the S&P 500 who've got positive point and figure charts. We rallied today and that number dropped. The number of new highs versus new lows dropped. The number of stocks over their 200-day moving average dropped. So the implication is that today's rally was not broad-based at all. Now, of course, time doesn't run out until early tomorrow. I'm not going to predict what happens overnight, but so far it's not good enough. Bulls need to gap and promptly overtake today's high if they want to continue higher unabated. And if they can't do that, I think we trade lower tomorrow. Doesn't mean you have to close lower. I believe we're in for more chop and more consolidation. We don't always get a sizable move right before a 3-day weekend, so you might have to wait until Tuesday when the market reopens to see how things resolve. I mean, you can get a big move tomorrow, but it's not without precedent. If we go nowhere tomorrow and get the big move on Tuesday, it doesn't mean it has to happen, but it certainly could. So if we don't do anything tomorrow and close a little change and get the gap up on Tuesday, I'm still going to count it. But the ideal situation is to see if there's more to this by gapping up, and I'm not totally convinced that's going to happen. We'll forget about this optional target. We still have a lower target, 4105, higher target at 4173, 4207. I'm looking for more chop in all these things printing. I don't think we're prepared for the big rally higher yet, but I think once we're through with this chop, which might take a bit more time, perhaps even weeks, once it's done, I think we're going higher. I'm not optimistic about this rally, though. We can still write things by gapping and going up. We gap up, you can just forget everything I say. But so far, this is just backing and filling, and it's nothing more than that. Tomorrow's pattern has the early high, and that is today's call.